Happy Friday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's #2 economy. My name is Tony. Let's jump in. Now, we have a very big episode today. There are a lot of important developments to move through. In fact, so much has happened that there will likely be 2 videos over the weekend, both on Saturday and Sunday, to make sure that we're up to date. Today, Friday, sees the publication of China's 2024 economic numbers. There is a lot to unpack. We will be doing a deep dive into those numbers tomorrow. For today, we already have enough to cover, and we'll start with a very concerning development with the housing crisis. It is official. Vanke, one of China's biggest and once among the most respected developers in China, has collapsed. State-run financial media outlet The Economic Observer broke the news yesterday that the CEO of the real estate giant Vanke has been taken away by police and that a government task force in Shenzhen has taken control of the company. With this action, every major Chinese developer has either collapsed or has been kept on life support by local authorities, a sign of just how much rot was under the floorboards of China's formerly biggest growth sector, and just how big a challenge it has been for policymakers to deal with over these several years. The sector, which once accounted for around a quarter of the economy at its peak, has been mired in a debt crisis since 2021, resulting in corporate defaults and tens of millions of uncompleted homes. Vanke's financial woes became public early last year after the firm sought to extend the maturity of its debt as its monthly sales plunged below break-even levels. It was ranked number 5 by sales volume in the country last year, down from number 2 in 2023. The market crash around this developer has been swift too. The already rock-bottom stock price plunged a further 10% as trading opened today, Friday, and 5 of its onshore bonds were temporarily suspended from trading after plunging more than 29%. Meanwhile, it's not looking good for other developers either. This week, Chinese financial media outlet Yitai reports that Chinese real estate companies, including Country Garden Holdings, are proposing debt restructuring plans with worse than expected terms, asking creditors for significant concessions due to poor home sales and shrinking balance sheets, according to industry insiders. The latest schemes propose that creditors forgive substantial portions of debt principal because home sales and property firms' liquidity have not significantly improved over the past year. Foshan-based Country Garden, formerly China's largest property developer, recently proposed a plan to restructure its overseas debt, aiming to reduce its liabilities by up to $11.6 billion. As of the 31st of December last year, the firm's total overseas interest-bearing liabilities stood at $16.4 billion. Another industry giant, Sunac China Holdings, recently unveiled its second debt restructuring plan because its first scheme, agreed upon in late 2023, was proven to be insufficient. The latest program asks creditors to forgive over 50% of the home builder's outstanding debt. Quote, according to an insider at the property company in eastern China, home sales and asset deposits are crucial funding sources for distressed real estate companies to repay debts. However, sales among China's top 100 real estate companies fell 30% last year, and builders in default performed even worse. This forced them to revise their debt restructuring schemes after failing to meet sales projections included in their initial 2023 restructuring plans. End quote. Now moving to a very different Chinese company on the other side of the Pacific, Chinese-owned social media giant TikTok may well have been saved at the last minute as politicians, some of which voted for the TikTok ban from both sides of the aisle, appear now to be trying to find a solution to save the company. As the January 19th deadline approaches for TikTok to divest from its Chinese parent company, ByteDance, or face a full ban in the United States, US lawmakers and others are scrambling to find a solution to avoid a nationwide ban on the popular app. Representative Mike Waltz has indicated that President-elect Trump is exploring options to, quote, keep TikTok from going dark, end quote, citing provisions in the law that would allow for a 90-day extension if significant progress is made towards a divestiture. This extension could provide Trump with the necessary time to broker a deal that would allow TikTok to remain operational in the US. Senate Minority Leader Chuck Schumer has expressed concerns about the national security risks posed by the app, but has also called for more time to find an American buyer. Schumer emphasized that millions of Americans rely on TikTok, and a rushed ban could disrupt their livelihoods. He has worked with both parties to extend the deadline and avoid unnecessary consequences. In addition to these legislative maneuvers, Trump's advisors have suggested that the outgoing president, that is, President Biden, could issue an executive order to suspend enforcement of the divestiture law if the Supreme Court rules in favor of the law. While the law provides a mechanism for an extension, some legal experts believe that Biden's administration may not have the authority to delay the deadline, especially with the transition of power looming. As the debate continues, TikTok has also made its presence felt politically, with reports that the company will sponsor an inauguration party for President-elect Trump, further intertwining the app's fate with US political and legal developments. With time running out, both parties do appear eager to avoid a ban that could have lasting implications for users and the broader technology industry. Veteran China analyst Bill Bishop sardonically observed on these developments today, quote, "TikTok called American politicians bluff with its announced intention to shut down on January 19th. And politicians on both sides are caving, in spite of the law for which almost all of them voted. There is a bipartisan scramble to figure out how to keep the service alive. The Supreme Court has scheduled an announcement of options starting at 10 a.m. Eastern Time Friday. And so perhaps the court will put the feckless politicians out of their misery by either overturning the law or issuing an injunction or administrative stay. This whole process has not only been gross, but also embarrassing, and it will be interesting what lessons Xi and his team take away from this whole mess." End quote. We should note that Bill Bishop is an American citizen who is based in Washington. Meanwhile, while we are in this space, one of the interesting stories from this week, which is also tied to the TikTok stuff, has been the surge of TikTok users to RedNote, the English name of a Chinese social media company, Xiaohongshu, which literally translates to Little Red Book, a reference to the Mao-era book popular during the disastrous Cultural Revolution. While China's foreign ministry is using this development as a PR win, the sudden movement of users to the platform appears to have caught PRC censors off guard. As the US-based outlet The Information reports, the Cyberspace Administration of China, the country's internet watchdog, is concerned that English-language content showing up on RedNote may contain politically sensitive posts that are not otherwise allowed on Chinese social media, according to 3 people with knowledge of the communications between Chinese officials and RedNote. Chinese officials raised the issue with RedNote's government relations team earlier this week, the outlet reports, warning that the company needs to ensure China-based users cannot see posts from US users, according to 2 of the people. Since then, RedNote employees have been scrambling, the outlet writes, to hide US users' posts from Chinese users. While the interaction between users in the US and China on RedNote have mostly been light-hearted banters and friendly cultural exchanges, the sheer volume of the content was enough to alarm Chinese internet regulators. Veteran China analyst Bill Bishop also had an interesting take on this. Quote, "The surge of TikTok users to Xiaohongshu RedNote has been interesting and fun to watch, but I'm skeptical it will last. Both because TikTok is likely to get a reprisal and because PRC cyber regulators cannot be comfortable with the spontaneous interactions. On the one hand, the Ministry of Foreign Affairs is undertaking an aggressive effort to project openness and build people-to-people engagement with the US, so this influx of Americans to RedNote should be a good thing. But on the other, more powerful regulatory hand, this influx of Americans threatens this information management regime and so is likely seen as a political security threat. If regulators wanted to be clever, perhaps they could create a walled garden within Xiaohongshu RedNote where the foreigners can gather and post while on the Chinese side only politically reliable users are allowed, so the foreigners will think they're having an authentic Chinese internet experience and learning about real life in China, but in fact would just be another managed people-to-people engagement. That may be too complicated though. It would be nice if the unfiltered engagements could continue, but allowing that would require a real shift in how the party manages the internet. Still, there may be an upside for RedNote and its investors, as if they go public overseas, the brand recognition from the surge in overseas usage may also drive a surge in interest in the IPO. End quote. Now we have one more development to cover, but just quickly, if you're getting some value from today's episode of China Update, it's a huge help if you can hit the like button. And for regular viewers who have not yet subscribed, it's also tremendously useful for the algorithm if you consider subscribing. Hit the bell notification icon and you will be on top of this analysis as it's released. Patreon and Buy Me a Coffee links are also in the description for those who want to help keep the channel financially sustainable. I rely primarily on subscriber support, so this is also a big help. Thank you so much. And finally for today, Scott Bessent, my apologies if I'm mispronouncing that surname, President-elect Donald Trump's nominee for Treasury Secretary, has made bearish comments about China's economic outlook, describing the world's second largest economy as, quote, being in a recession, if not a depression. End quote. The comments were made as he testified on Capitol Hill yesterday as part of his confirmation process. Bessent criticized China's economic imbalances, pointing to its prioritization of military spending and reliance on exporting cheap goods to sustain growth. His remarks come as China grapples with a prolonged deflationary period, with economists predicting that the country may experience its longest streak of deflation since the 1960s. The situation highlights the depth of China's current economic struggles, further exacerbated by the challenges of balancing military ambitions and economic stability. Of course, regular viewers know very much the difficulties China is in economically. Bessent also called attention to China's failure to meet the agricultural purchases commitments outlined in the Phase 1 trade deal between the US and China signed during the first Trump administration. Under this agreement, China was expected to purchase $40 billion worth of US agricultural goods annually, a target that has been increasingly missed. Although Chinese purchases peaked at $38.1 billion in 2022, they have dropped significantly in subsequent years, with estimates showing a 16% decline in 2024 compared to the same period in 2023. Bessent vowed that, if confirmed, he would press China to resume these purchases and possibly seek a catch-up provision to make up for the shortfall over the past 4 years. Bessent's stance on these issues signals a tougher approach to US-China relations, particularly regarding trade imbalances and China's handling of its domestic economy. The outcome of his confirmation and subsequent actions, combined with some other key cabinet positions, for example Marco Rubio, who we discussed yesterday, along with, of course, President-elect Donald Trump himself, will significantly shape the US approach to its economic dealings with China in the coming years. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Friday, have a restful weekend, and I will see you all tomorrow.